Up 588% in the stock market as of June 2020. Hello, I'm Rich Pawson. This is a Critical Point podcast. It is July 22nd, 2020. And I'm just pointing out some of the performance relative to a portion of all the modeling that's done at my firm. Basically, we're modeling business cycle trends as well as just time cycles related to those business cycles. And we're looking for a variety of patterns, and we believe it's the people running businesses and investing and hedging that make the greatest impact and the greatest difference. They don't have to follow the fundamental information all the time. They don't have to follow the news all the time, or they may follow it more aggressively than they should. So the modeling is trying to dial in the human footprint, if you will, as well as the fundamentals and the other types of information. Now, inside that model, we can show trends lasting seconds, minutes. In our podcast, we do show trends as fast as intra-week to intra-month, and then intermediate or intra-year trends for the trader or for the long-term investor who would like to know why the market is fluctuating the way it is, as well as to point out some of the intermediate, intra-year opportunities to buy more stock for their long-term position. And then the model expands into long-term trends. And when we can warn when we're having long-term tops, long-term bottoms, it can even warn of when a recession is coming into play. And this has been the case this year. The model had been warning of a coming recession. Anyway, what I wanted to show you, this is the SP 500 stock index. Now, back around August or November of 2010, or first of all, the model made a call in March 2009. That was the month of the bottom of the end of the super cycle crash, the financial crisis and Great Recession, and the stock market started rallying. Now, I had been buying from March, but I jumped in and out a few times. And finally, around August to November of 2010, I said, why don't I have a separate account that's going to have a position in it that's going to follow the major long-term trend for the next 10 years or whatever. And so about that time, I made a purchase and then just simply left it alone, following all these twists and turns up. And the model did a fairly good job keeping up with all those. But instead of taking action on it, I did nothing. I just sat on that position. Now, it's not the S&P 500 itself, as more of an ETF fund related to the S&P 500. Now, I sat on that all the way into 2018 when I warned it's time to look for a recession, a bear market of minus 20, minus 30%, or somewheres with minus 15 to minus 50%. And so I finally got stopped out. In other words, my other investments I pulled out earlier, but I left this long-term alone just to see if I could squeeze out some more. But I got stopped out on this decline going into December 2018. And I stayed out for a while, then went back and decided to manage it a little bit short term as I kept trying to find that top. So I was in and out a few times. And finally, going into February, I was out of the market, let it fall. And then we made a model call March 25th that the bottom was already in place 2 days prior, and I had made an actual purchase in this account, and so we're back to making money. And as of June 2020, from August, I got to change this label, from August 2010, up 588%. So this is labeled incorrectly. We'll go ahead and change that right now. And there we have it. August 2010 to June 2020, up 588%. Now, this particular index, the S&P 500, which a lot of people use to represent the entire stock market, was up 295% during that time. So basically double the return, okay? As of July here, we've seen this position up over 600%, okay? So at any rate, still in and still feeling long-term bullish, and I hope you'll join me on this journey for a long-term bull market that could last into 2028 to 2031. And if you want more than long-term, the Critical Point podcast is going to try to time a lot of the important twists and turns along the way. There's something there for the short-term trader, there's something there for the intermediate trader, and then something there for the long-term investor. And as a long-term investor, I like to know when it's time that I'm going to start losing in my investment, I'm going to start giving something back. I can still have the discipline and not touch it, but I'd still like to know about what's going to occur. I think it actually gives me greater discipline, makes me more comfortable. Hope this makes some sense. Hope you'll sign up for criticalpoint.podbean.com. Go to that site. You can also find it on Google and Apple and a variety of other podcasters. Okay, you can find the Critical Point show. But like I say, you can go right to the website at criticalpoint.podbean.com. Basically, billing starts 2 weeks late, so you can get yourself a 2-week free trial if you cancel it soon enough. But it's cheap enough. Service is $27.99 a month. So come on, folks. Way to go. We get right to the point, mostly just signals and model output, but we do try to point out some of the news and fundamental and data that's going into it from time to time. We also give quite a bit of free stuff away, and we love to talk, provide free stuff on long term. But the point is, when you want that signal when it's time to buy long term, got to be part of the service here. Join me over the next 10 years. Let's see if we can make some money. Manage your risks relative to analysis of others and your own. Thank you very much. I want to add that some of our intermediate to short-term trading this year has come up with a year-to-date going into July as high as a 43% return trading, say NASDAQ and the SP500 futures and a variety of ETFs and whatnot, and compare that to the stock market being about breaking even to minus 4 or 5% at times for the S&P 500. And of course, earlier this year, the stock market was down as much as 35%, and yet we actually made some money on the downside for those who were willing to do that, and then turned that intermediate and short-term program more towards the long side, starting on March 25th. So nice return this year for the non-long-term trading portion of our model-based research and analysis. Thank you.